Um, I guess we could try to plug it in. All right.
Hello in there! Hey, what's so important? What you got here that's worth living for?
Thanks for tuning in with us. I'm Paul McNeil, and this is To Blathe. And we're here with James Kimball, and it's a great opportunity. He's back east, his family's from North Carolina, and he lives in Santa Fe.
Are you there? Do you swear you won't forget me?
When I visited him last, my little goat was actually kidnapped. I'll have to tell you the whole story sometime. But kind of a tragic tale. That tragic tale ended well. We got the goat back, much with James's help.
Yeah.
And but anyway, it's good to see you, James.
Great to be here.
I wanted to take the opportunity and kind of pick your brain about a few things. But what actually comes to mind off the bat, I remember when you were studying economics at George Mason, you had Walter Williams as a professor, and he just died recently. And when I saw the news of his death, obviously I was saddened to have lost such a, of all things, a really amiable guy. I mean, I love his positions. I love so much about what he did, but he was just such a likable guy. But I don't know if you have any anecdotes or just any thoughts about Walter Williams, having him as a professor.
Well, he was a really great guy, kind of a giant in his field, in that, well, he was really a popularizer for economics. I first heard him when he was on the Rush Limbaugh show. He would host over the holidays. My dad, of course, listened to Rush. Read some of his books. He had a weekly article in Town Hall. And he taught at George Mason and helped develop that program to be a real libertarian kind of powerhouse.
Do you think he helped bring in like Kaplan or some of the other guys? Or?
Yeah, he was very instrumental in shaping the way that department grew. And yeah, it's a shame really, because of course he's African American. One of his close friends, Thomas Sowell, of course, equally brilliant, and both of them getting up, well, Thomas Sowell now pretty much getting up in years. And really a shame to see how little coverage actually Walter Williams got.
It really is a bummer.
Now, of course, in a year like this year, there's been a lot of notable passings and plenty on the front page of the news, so not entirely unexpected, but...
Well, he definitely will be left a big hole. But anyway, James Kimball is an investor and an economist and a dear friend of mine. And he works for, tell us a little bit about Market Gauge. They're based out of Santa Fe.
Yeah, it's a small boutique trading firm. It was started by Keith Schneider, who was a floor trader back in the 80s. And really had the DNA of a floor trader, which is, momentum trading, following the tape, and brought that kind of philosophy into the firm. And I've been working there for 7 years now and helped develop some quantitative trading models kind of based on some of those same principles. And we now have a whole family of models that cover all sorts of different market niches. We have a NASDAQ All-Stars model. We have a small cap model that we just came out with. And doing very well, enjoying it. Really like being in the markets. And really, it's been called the last liberal art in that markets really require incorporating everything you know about humanity, about the news, current events, politics, finance, business, economics, all that together to come up with how to make money or beat the pros, basically.
Beat the pros. And you guys, this year, beat the pros by any measurement.
Yeah, this, of course, 2020 has been a very difficult time for the markets. We had the markets were making brand new all-time highs in January and February, and then we had the quickest 30% decline in history.
Really?
And subsequent, I guess, really the intervention with the Fed and the Treasury signaled the bottom, actually. And then we've been on a pretty tremendous bull run since then, with all the indexes closing positive on the year and confounding everybody, basically.
Well, let's get into that real quick. I mean, obviously, there's 1,000 people who have their opinion on whether the stock market's overvalued, undervalued. But from your perspective, like you said, at its heart, the markets really bring everything to bear. And you're the one who introduced me to one of my favorite authors, thinkers, Nassim Taleb, who really kind of is the, in some ways, example of the polymath trader, made his millions as a trader. And I think from his perspective, certainly, he made millions not because he had the right insider tips or anything like that, but because of his understanding of reality and human nature and history and philosophy, really. When you and I first got to know each other in terms of, economic ideas, you were kind of a gold standard guy, an Austrian, and incidentally, you were the one who pointed out that Greenspan came from Austrian roots. Now we've got...
And Bernanke, too.
And Bernanke?
Bernanke was a big gold standard guy until he got into position of influence. Right.
So now that you're, making money for folks and for yourself on Wall Street, did you sell out like everybody else, or do you still believe in the gold standard, or is it what you tell me? I'm not going to put words in your mouth.
Well, we're a long way from that. The true there's nothing magical about gold. What it is it's a way to hold the government to its own standard. Basically, it's a way to limit the government's ability to inflate. All governments want to inflate their currencies. It's popular if you give people money. It's a lot easier to expand the government's influence through monetary inflation than through raising taxes or lowering benefits.
Do you think? Obviously, fiat currencies are something of a modern invention. Every early experiment collapsed very quickly, right? The earliest I can think of is like around Civil War era. I don't know if there were earlier paper currencies, but they quickly collapsed. Is the success and the expansion of fiat currencies something to tie it in with the spread of democratic republics, or I don't know, where do you see the basic historical place of that, and where do you see it going?
Well, really, if you go through all history, it was, even when you had a gold standard, they would shave coins, they would recollect the gold and reissue new coins with different values. So it's been the long history of those types of practices, but fiat currencies allow it to be done much easier. It basically reduces all the friction in the system. And of course, we moved really away from that after World War II, and what is the real effect of it? We have seen a huge increase in the average rate of inflation or devaluing the currency above what it was before. But
the last 20 years. certainly the last 10 years, have seen expansion of money supply, the likes of which the universe has never seen before. And we've seen negligible inflation. Is there a piper to be paid? Or have we found a new way to print money rightly?
Well, there's a combination of factors. One, technology has just been a giant counterforce.
Just making things cheaper.
Yes. So that works both ways. And you could maybe even say it was... So what we're basically squandering the gains of
Technological
technology.
innovation,
And it's not that it's a total waste. All we're talking about is transferring money from those who are on fixed incomes, of course, are the worst hurt by inflation, and those who get the first chance at the money are the most to benefit from it, which are the banks and the well-connected businesses, and of course, so that's been kind of the effect of things. But it's certainly, it's far what I would have expected if I was going to be a strict Austrian in terms of reading things. So whatever the trade-offs there, or the rubber banding around this concept is obviously a lot more fluid than
the Austrians were saying. At least.
Yes. And I have moved away from kind of a strict orthodox view of that.
Really?
But there's no doubt, modern monetary theory is currently the hottest thing. And it basically is that deficits don't matter. And it turns out that they don't matter until they do, of course.
Right. So, I mean, I guess the big question is, are we setting ourselves up for... You were the one that introduced me to the idea, along with Taleb, of, that there used to be runs on the banks every, 9 to 15 years, and that kind of kept the banks honest. And the idea is basically you either have really small conflicts, problems, whatever, and this applies to anything, life, international conflicts, whatever. Either you have a lot of small skirmishes, or you have a huge peaceful empire that eventually crumbles and creates chaos, the likes of which the universe has never seen. Is there any way that we're not going to have to eventually pay the piper here? And I hate that phrase, pay the piper. It's so ambiguous. Is there any way the other shoe's not going to fall?
Well, we are in a privileged position in the U.S., being the dominant power in the world, basically controlling the financial systems throughout the world, the dollar being a backup currency, reserve currency. So we are in a position where we don't have to pay the full price of our spending and deficits, whereas small countries who rely on other currencies to value their own are on a much shorter leash.
Yeah.
And that privileged position is eroding constantly in terms of our total influence on the money world. It's obviously shifting towards Asia, and it's hard to imagine that trend is going to significantly change. It's probably just going to continue that way. And then at one point, of course, now everything in the world currently is very interconnected, so there would be really no benefit for China, for instance, to introduce a major destabilizing event into the currency, because they hold U.S. currency as well. But you could see an event like that, and it will probably come suddenly, and that could switch things up pretty fast, I think.
Yeah. But I guess, as with, one of the main things with market moves is timing is everything. To be able to predict that things are going to collapse, and this is what I, tell a lot of my doomsdayer friends, it's not hard to predict that things are going to go bad. I just bought a brand new truck, and I can predict without a shadow of a doubt that it's going to break down. Eventually, it's timing those predictions, right? Because I mean, like, you know.
Yeah, and you know, economists are famous for predicting 10 out of the next 2 recessions.
I've never heard that line. I like that. But I'm thinking about, like, you know, somebody that might be watching this show. What does this mean to them? One thing that comes to mind is a lot of folks that I talk to. You know, I've used a lot of credit to expand my business, and basically my approach has been, you know, you got to dance to the music that's playing, and our system is rigged to the advantage of people who can borrow money, and make that money work for them. And I've done well because of that, and by the grace of God and good luck and the help of my friends and all that. And you have. I'm sure we both have friends who make extra payments on their mortgage, who, God forbid, actually have savings and, like, put them in, you know, bonds, say U.S. Treasury bonds.
Yeah, well, that's typically, I mean, the advice. Money is, of course, very cheap to acquire right now, very low interest rates, and every dollar that you pay off is going to be worth less when you pay it off. So, certainly, high amounts of debt, particularly if you're going to put it into a hard asset. Hard assets are good advice, because if you think about, if all the money was burned up tomorrow, there would be a lot of dislocations in the economy, but your hard assets are still basically valuable. Money is not valuable, it's what you own or what you can do with it.
Yeah, I don't think a lot of people realize that the collapse benefits debtors. Everybody, I mean, I hear friends talk, and I'm proud of people that pay off their houses and have no debt and all that. But I don't think, you know, they're afraid, well, I paid it off and that keeps me safe from a collapse. You know, if you have a 30-year mortgage with no balloon, they have no legal wherewithal to call it. I can't imagine any collapse that wouldn't make that debt easier to pay.
Yeah. Yeah, and then of course there's you know, good advice is diversifying across you know, the hard assets as we talked about.
When you say hard assets, you mean
property,
real estate, gold.
You can consider certainly gold and silver. It's actually remarkable, you know, depending on where you measure it, the gold actually keeps up with some of the you know, the S&P 500 at times over a different period.
But that's just because of coincidental fluctuations, wouldn't you say?
Well,
or is it hard to tell?
Over time, the you know, actual productive assets do outperform, but depending on when you buy it, you can find peaks and troughs in either one, and match it up pretty well. Of course, the latest ones are Bitcoins and cryptocurrencies.
Let's talk about that real quick. Because we have a mutual friend who is looking to get into Bitcoin, and he said, you know, James is bullish on Bitcoin. I was first introduced into Bitcoin. Bitcoin was about 270 a Bitcoin, just for frame of reference. Now it's 27,000, so that's a substantial increase. And I didn't get in, even though a lot of my friends are getting into Bitcoin, I didn't get into Bitcoin for a couple of reasons. The main reason was I really couldn't wrap my mind exactly around what the heck it was. I got the idea of the blockchain and the basic concept of the process. But all that aside, I'm not asking you to explain Bitcoin, but what I do wonder is, what do you think is the best possible, not as far as the numbers, but as far as like reality? Do you see a potential for it to actually catch on as a currency?
Well, as a you know, there's multiple uses of money. One of them is a medium of exchange, and there's a lot of arguments that Bitcoin is far less efficient or more expensive than credit cards or other forms of exchange. And of course, one thing that you like with money needs to have a fairly stable value, so that if it's radically changing every day, it becomes difficult to use for money. But presumably it has to have, at least at some point, if it's not operating as a medium of exchange, it could be operating as a store of value, is the other use of money. And so that's been mostly the way that people have treated it in terms of its appreciation. But again, we have these wild swings, and it's very hard to predict. Of course, the regulatory situation is very uncertain, and it's likely that the anonymousness of Bitcoin is going to be hard to maintain. So many of the things that people liked about it at first are eroding. But at the same time, in this globalized world, it's a great way to move money from one country to another without, particularly in China, where in certain places where
capital controls and all that.
Yeah. So there's a huge purpose for that. And then, of course, recently we've had, so this year in 2020, there's been numerous stories about institutional buying. JP Morgan was initially extremely against it, and now they're starting their own fund.
Really? Bitcoin or a crypto fund or something?
Yeah. And then we have a massive...
Is Diamond still running?
I believe so, yes.
Yeah. 'Cause he was pretty anti-Bitcoin.
Yes, now he's on board, or at least he's been told by his firm to get on board.
You think it's an optics thing, or are they just kind of making sure that they have a foot in the door in case it actually pans out?
I think there's a combination of strategies. They are hedging kind of their bets, but they're going to come up with their own. They're integrating blockchain as their own, and they're going to come up with their own coin, so to speak, to facilitate exchanges within their bank. So it's a variety of strategies. But we're seeing a big retail wave. We have PayPal now offering, you can buy and sell and hold Bitcoins with PayPal accounts. That's 330 million accounts.
That's a big deal. I mean, that's pretty much responsible for them.
Yeah, then that just came online the last few weeks.
Yeah.
We have Venmo, we have a number of other. So one of the big things with Bitcoin is it was just very hard to figure out for the average person how to buy it. So that's being all eroded. So I do see a pretty big retail adoption wave coming in.
Did Thiel have anything to do with PayPal? Is he still involved with PayPal at all?
No, I don't believe so. I believe that was sold off.
Oh, okay. Do you keep up with Thiel much?
Yeah.
What's he up to these days?
Well, of course, Palantir is his big new endeavor.
What's that?
I'm
talking about Peter Thiel, a venture capitalist and
Thiel
investor.
Capital. Palantir is a kind of a shady big data Silicon Valley company with a lot of big CIA contracts.
Really?
But they just recently went public this year.
And Thiel's involved with that?
Yeah.
Come on, Thiel. Well, I guess just for me, it's hard at the end of the day to see something as a holder of value that really is, I guess it's digital. I mean, it's, it's not even anywhere really. It's everywhere. I mean, it's the blockchain is sort of a ghost in the system, so to speak, or something.
Well, the whole thing about treating it as digital gold is a mirage right now. Holding it has been great, but it's never actually acted as a hedge per se. In the 2020 crash, Bitcoin crashed as well. It went down. I think it went down worse than the overall market. So it is not an adequate hedge. But although certainly you could say over any longer period of time, it's pretty much always gained value.
And it's so new. It's really, we don't have a big enough.
Yeah, but I certainly wouldn't invest anything in Bitcoin that you wouldn't be willing to lose, and potentially overnight its value could evaporate. And one thing that I don't hear talked about a lot is quantum computing. A lot of Bitcoin is basically works because it fits within the construct of our current computing power. But when you have astronomical increases in computing power with quantum computing, it could potentially totally change the game. And that's the same thing with encryption now. We have 64-bit, 128-bit encryption. Well, quantum computers basically crush that stuff.
Really?
Yes. So
It could be a big game changer.
So you have an arms race, basically.
Might have heard it first here.
And Bitcoin might have a very short niche in terms of the historical
Computing, where it fits in the whole. Wow. Well, man, I'm not really privy. I was telling you earlier about. Generally, I'm, as far as technological innovation, I'm quite ambitious in my imagination of where things could go. That was set back a little bit by jumping 25 years ahead in terms of my truck and really not seeing much difference. Happy with the new truck. But, it's pretty much does the same thing. I don't know what else. It's not that the thing about technology is, it's not that you have expectations, you just have a vague thought of how it could be amazingly different. But anyway, quantum computing and the potential for, the upset of the fabric of our society, when I start thinking about robots making other robots, and computers designing the computers, that kind of huge leaps in technology. When I see Facebook can recognize my face, your face, whatever, I'm able to imagine, well, if it can, see things like that, well, it can pick grapes, it can vacuum floors, it can do, whatever, all these different tasks. Now, these things tend to make the average human being wealthier, right? It just huge wealth multipliers. And by and large, that's been a wonderful thing. It's saved lives. It's brought people out of. Would you? I tend to think that people romanticize the past, and I love the past. I'm very much a traditionalist, but technology.
They say the best explanation for the good old days is a bad memory.
Most people don't realize and haven't come to terms with how terrible life used to be for most people. The poorest American now lives like a king compared to even some of the wealthiest people, 200 years ago, right?
Yeah, there's, it's actually, cognitive biases, I really like studying this, and one of them is kind of the survivorship bias. And, there's this concept, this idea floating out there that things in the past were made to last. And it basically boils down to, well, actually what you're seeing is not what happened in the past. What you're seeing is what they built in the past that was capable of surviving till today.
When you told me that really changed my whole... Because we all just think, oh, look at this 1950s camper. That was made to last. The ones fall apart now. But there was probably hundreds and hundreds of thousands of campers made. And most of them went to the dump within 10 years.
Yeah, then we have become a mass-produced society with, but certainly, yes.
But I've lost track, because what I was thinking is the quantum computing and the changes in society, the massive wealth. We had Yang running on the UBI, and most people's opinion was kind of not that he was a sideshow, but that his issue was probably inevitable. What is the world going to be like? Let's just say if nobody has to work for their basic, to live like an average American, when everybody's getting a check, probably both things are going to happen, right? Stuff's going to get cheaper and cheaper and cheaper, and probably some things, despite inflation, and despite having, dropped a lot, some things might find some new. If you get machines that are 3D printing houses out of, polymers that they make out of garbage or whatever, we could really have some big jumps. Bottom line, when everybody's got all their needs met from the government, or even not, whatever. That part doesn't matter, but as much to this thought experiment. Is that a realistic fear? And what does that look like, you know?
Yeah, well, this has been a concern throughout history. You know, in the early 1900s, 30% of the economy, people worked in agriculture. And basically now it's less than 3%. All those people basically found new jobs, new industries pop up. And you don't like to say, well, this time it's going to be different, because we faced this question so many times throughout history. Every technological invention displaced jobs or displaced work that could have been done by other people. And it is a huge fundamental shift when you think about it, to go from a world of scarcity, which is fundamentally what economics studies, is scarcity. It's how to proportion scarce resources.
Sure. It's important.
And if we move into an age of abundance, where there is truly abundance, and not just for rich, wealthy countries or for people living above the average for their population, it's very different, and people are struggling. What does it mean? So much of what we as human beings get enjoyment out of life is through labor, through work.
Or like overcoming real adversity. Although I guess from a certain perspective, we've already been there for 50 years. And it hasn't, I don't know, I guess there's some hunger in America, but by and large...
Yeah, but in theory, the artificial intelligence revolution and computers, and like you mentioned before, once computers start making computers, will that eliminate the need for jobs? Is this going to create a utopia where everybody can enjoy their time doing whatever they please? Or is this going to create a dystopia where Jeff Bezos basically runs the world from his ivory tower, and everybody else just picks up the scraps of what's left over? I hate to say it, but this time might be different.
Uh-oh. Well, you heard it here, an economist saying that maybe these doomsdayers, they could be right. And again, though, we got, as you said before, it's easy to be right and be a doomsdayer. It's hard to know how and when you're going to be right. A couple just sort of celebrity questions. Just curious your take. The big Tesla question. I've been seeing news about the Tesla bubble, and this can't last much longer. 2 years now, 3 years, and it's at all new highs. Now it's worth what, more than Ford and GM put together, or something like that?
And Toyota.
And Toyota. What the heck is going on?
Well, it's definitely not being valued on the fundamentals. I can tell you that.
But Amazon wasn't either. But people were able to imagine everybody shopping at Amazon. Can you imagine everybody driving a Tesla?
Well, I think, I can imagine everybody driving electric cars. But it's always been a little bit of a hurdle here, thinking there are a lot of companies that have a lot more experience creating cars. And doing that efficiently, or running. Part of many people complain that the Teslas are actually fairly poorly assembled, and it's a little bit of a cult devotion to Elon Musk. But it's betting against him has been a very bad idea for a long time. And there are people still, especially on Wall Street, that have been short since $30, And
really, that are holding their short positions.
They are still, yes, it's still one of the most heavily shorted companies.
Really? They can't shake, that's some serious margin calls.
Yeah, so it's not going to be straight up for this company. I'd have to say, with whatever you thought of the valuations in prior years, with this year being up between 400 and 600%, it's obviously it's in terms of an investment. I can't say it's a great time to buy in there, but yeah, it's being valued as if it was a technology company, and as if many more people are going to own electric cars in the future, and it's really a bit of just a play on Elon Musk and his brilliance, so
celebrity power or whatever. Some folks watching this invest in the markets. Others maybe always wish they had, and maybe some dabble through Robinhood and some of these things. First of all, how did you get started? I know we're running out of time here, but just kind of briefly, how did you get started? And kind of, if you can kind of roll into, like, would you suggest people even get involved in the markets if they're, if they got maybe 5, 10, 20,000 saved up, or would you suggest they do something else with it?
Yeah, so I was initially, I had an uncle who did investing, and my grandfather as well. So I was familiar with it. Not that we talked a lot about it at the dinner table, but very aware of it growing up. And really in grad school, studying economics, I had a roommate and friend from Russia who was a day trader and got me hooked on it. And certainly didn't make a lot of money quickly, but after studying it for several years, I decided to head out on my own. Traded on my own for a few years, paid the bills, and finally went back to Villanova for a degree in finance to get a little more formal education, and worked for a boutique firm now, designing our own custom quant trading models. And so it's tough because it's something a lot of people think it's easier than it is, and some people think it's impossible. It's not something you can do. I mean, the way my style of trading is fairly active, so it's difficult for a lot of people to do that.
Sure.
But if you want to get started with a small investment and you don't know that much, the typical advice is to buy what you know. The idea of retail intuition, Peter Lynch popularized this. So if you see a phenomenon that's exploding, a company that comes into your area and all of a sudden you're seeing shops all around, Starbucks, whatever, that might be something to pique your interest and go take a look at this stock. There's a lot of resources in terms of education. My firm actually specializes in market education as well.
This Market Gauge, if people are interested, where they go to?
Yeah, Market Gauge, that's Gauge, if you're...
One of the hardest words to spell.
Yeah, marketgauge.com. And of course, you can pretty much find us anywhere on our website. We have YouTube, Twitter, all over the place.
So if people do want to invest in something that makes sense to them, one thing I kind of encourage, and sometimes a little more of a challenge, I encourage people to learn how to put their money where their mouth is. So for instance, if you're complaining all the time that Goldman Sachs and well-connected New York insiders are siphoning off all the money, turns out you can own part of Goldman Sachs. So just buy into Goldman Sachs, then you're the Goldman Sachs. If you are, I remember I once had this professor I was talking to. It was a little dinner party, and he was talking about how it was all rigged and oil prices were artificially high and all that sort of thing. And he seemed so darn certain. And I asked, well, have you shorted oil? Well, no. Well, if you're really so darn certain, put your money where your mouth is. And I think it's just a good principle. If you're really certain of something, figure out how. And some people aren't privy to, like how to short oil or whatever. But I think more and more of the resources are there to figure out.
Yeah, I mean, a great example is, maybe not right now, but a couple years ago, if you were really interested in buying a Tesla and you really liked what they were doing, if you had put some money into Tesla, you could probably afford one right now.
There you go. Well, I appreciate you taking the time to talk with us. Always a wealth of information, and yeah, I hope to look back on this and think, wow, little did we know that you and I would have gotten so wealthy off the investments we made. I'm just kidding. Not really.
Subscribe.